Good morning, fellow Sheridan people. We've had a down move. We've had a down move, and it's been a big down move. We're having a little bit of a bounce back today, but it's still a big down move. So, what we're going to go through today is 4 of the diagonal trades we have on in the baby account. And I'm going to teach you, or hopefully, I'm going to teach you, or hopefully, I'm going to show you a different way of looking at option trading. So, what are we in? We're in the hedging account? Yeah, this is the baby account. Let's go to positions. All right. Let's start with the obvious stuff here. We're going to start at the bottom and work our way up. XLI. This is a little trade we've been trading for a long time. We've got 5 contracts, been rolling down, and we've made some good money in it. But now it's got to a point where the delta is positive for put trades, which isn't what we need. The theta is non-existent, and the vega is non-existent either. More importantly, March 7, Feb 2, if we look at this trade, there's nothing left to roll. So what we're going to do for this one is we've looked at it, we've made good money out of this trade. If we go to our setup and just put in XLI, we made $300 on the trade so far, paid 25 bucks in commissions and fees. So we're doing okay. Let's just ignore that one. So we're going to close this one because there's no money left to make. But more importantly, what we can do is we can put another one on. And we'll do that later. Let's look at Shopify. What are we here? We are long the March 21, 125 call and short the 26 call. So I want you to think differently. That March 21 call, let's go into our history here. And let's look at this. We'll just type in shop. And we'll go to transactions under shop. All right. So we sold the 128 call against it at 550. We bought 3 of the March 21 calls for about $2.5 grand. So 3 of them for $2.5 grand, sold $1,600 of calls against it. That's not bad. So we only have about $1,200 left in the trade. Let's go back to the trade. We have 4 days left on this particular option. It's worth 25 cents. So we're going to buy that one back. 4 days, and then we'll go to the next day, next week, and we'll look and see what we've got to go against with regards to delta. We go to the position, delta, theta, vega. This position, we have 56 positive deltas. Why? Because we're long and way out of the money call. We're looking at the 126 call. We want about 30 deltas, 20 deltas, 30 deltas, somewhere around there. So we just want to take, let's say, 25 deltas off the trade. Here we have delta. That's adding 30 deltas to it by selling that. So what we're going to do is we're going to sell something against it and get us a little bit of a credit for next week. Now, if we look at this trade, 4 days in the future, the expected move is $6. Fair enough. So 115 plus 6 is 121. Let's start at 121 and sell that. $126, 121. Collects a $1.69 credit, and we lose 72 delta. Well, we've only got 55 delta, 56 delta. Losing 72 is no good because we always want to stay positive delta. Let's go to, it's 24 deltas. Let's lose 42 deltas. Still only positive 2 delta. That's no good. Let's go to 25. We'll turn into a calendar and get 83 cents. All right, we lose 34 delta. 56 minus 34 is about 20, gives us positive 24 delta. We collect a bit more money, and let's put that at 85 cents. Done. Shopify. So what we're doing is we're treating this long position here as stock. a stock we bought for $2. The difference is that stock could be worth $1 tomorrow, it could be worth $5 tomorrow. The main point is that we're treating it as stock and we're trying to lower the cost basis for that stock. Let's do it again. Shopify, done. Let's go to Microsoft. Feb 28 versus March 14, the 420 call, 420 call. So we're going to roll this 420. It's worth $1.06 at the moment. That's quite a bit. Only 2 weeks to go. How many deltas we got? 24 delta. So what's happened is Microsoft has obviously had a big drop, and it has. It's coming back to resistance. We're positive 24 delta. The big drop has raised the cost of that call and raised the cost of that put. Sorry, raised the cost of both calls. We just leave it. We're positive 24 delta. It bounces back tomorrow. We make good money. I don't want to go negative on it, so we'll leave that one. Google. We're along the 195. We've got 181. I'm guessing that got hammered too. Got hammered, broke through resistance. Probably going to fill this gap to 178.79, or it may bounce today. It's at 182, 182 and a half in selling. So what have we got? We've got 11 days left at 197. We probably want to collect some money back on this bugger. So we'll go up here. Oh, what's that? Dividend. Yeah, nothing to worry about there. So we'll buy this back for 31 cents, 11 days out. And we could do that and get a whole 14 cents back. Takes 10 delta off the table. We need more than 10 delta off the table for Google, I think. I think we'd be happy to take about 30 delta off the table. So what you could do is probably sell the 192 and a half and get 37 cents. Or we've got time. Let's clear that. Let's buy this one back for 31 cents, go forward a week and sell the 95, collect 50 cents on the trade, take 24 delta off. 24 delta, 60 delta minus 24 gives us 35 delta. And hope for the bounce. There we go. Review and send order. So let's go through those trades and see what we've done here. XLI, there's nothing to do here. We just close it. Try and get $1.05 for it. Review and send. Lovely. There's nothing to be made here, and we can put another trade on later. If we look at the chart, we're probably heading down to the 130 in a bit. So we'll sell the 132, buy the 130, or sell the 134, buy the 132. We'll put that trade on later. For Shopify, we're going to roll the short forward a week and down and turn it into a calendar. That brings the deltas down, and we're just selling against this particular stock option. Microsoft, we're leaving alone because the deltas are fine and we're hoping for a bounce. It's only $10 behind, and Microsoft can bounce $10 in 3 days. We're making good money on Microsoft. We just keep selling it. Plus, it's still worth $1. And 420 against the dollar, not bad. If you really wanted to cash in here, what you could do is 4 days. If you went to trade this and went, I'll take the $1.08 here, go forward a week and sell exactly the same one. Collect $1.60, move your trade out to 11 days. Actually, that's not a bad move, you know. You collect $1.60, move it forward a week, let that decay, and if the stock doesn't hit 420 for whatever reason, that $1.60 you collected will easily pay off the Microsoft trade. So that's a good idea. We'll do that. We'll move it to 165 and see if it gets filled. All right, and lastly, Google, we're just rolling. 197 down to 195. We're turning the diagonal into a calendar to, again, try and reduce our basis, and we're using the expected move as an idea between the two. That's how I'm doing my diagonal trades here. It's different with the bigger account, which has a ton of stock, because that stock is static delta, and I just simply sell options and options and options against it. I might do a video on that using Interactive Brokers later on, but that's a big account and that's got a lot of different positions. I think that may just lose most of you. So if I stick in the baby account with just 4 accounts, we'll just keep rolling these over the next couple of weeks. I'll keep giving you updates and we'll match it up with our diagonal trades. Hope you're all doing well. Have a good day today. We're up 30, NASDAQ up 86. Yeah, even the Dow's up 320. It looks like it's going to be a good session for a Monday. Have a good one.